We're going to work through now problem 5 on the worksheet. We've got a trial balance and we have some adjusting entries to make, and then we're going to work through the adjusted trial balance. So here's our trial balance right here. All its information, it's in balance, which is nice. And here's some information for some adjusting entries. So let's get going. First adjusting entry. Insurance is expired to the tune of $600. $600. So let's do it. What are we trying to do when we accrue something like that? The standard entry is debit expense, credit payable. No, that won't work because we don't have a payable here. However, what we're going to do is we have prepaid insurance. So we're going to debit insurance expense and credit prepaid. Let's go. Debit insurance expense. $600. And credit prepaid insurance. $600. That's number one. Number two, unused supplies per inventory, $800. Now, I hope you remember the cupcake formula, where we take how many we had on the shelf when we got in, plus we baked 6 cupcakes and we had 3 left, so we know we used 5. Well, it's a similar thing here, right? Except we don't know what we started with or what we have. Geez, all we know is that we walked into the supply room and we got $800 worth left. Can we figure out how much we had in the supplies account? Well, indeed we can, because isn't that what the trial balance tells us? It tells us how much is in each account. And I'm here to tell you that the supplies account had $2,100 in it after all the various debits and credits during the year. So what are we going to do? We're going to say the account had $2,100. We went in and we counted $800 worth. So not 80, 800. So what we're missing is 2,100 minus 800, $1,300 worth of supplies that we used. We're just using the cupcake formula again. So what are we gonna do? We're gonna take our supplies out of the supplies account and move them to the supplies used account, aka supplies expense. So let's debit supplies expense. And credit supplies. How much? $1,300, right? There we go. Moving on. Estimated depreciation, $1,000. Well, I hope you remember the transaction we do for depreciation, the journal entry. What are we trying to record here? We're trying to match up the cost of that truck over the life of the truck. So we're going to debit depreciation expense for $1,000, and we're going to credit. What's that special account? That special account is accumulated depreciation for another $1,000. Not $10,000, $1,000. Lastly, earned but unpaid salaries, $700. So people earn the money, but we haven't paid them yet, so we must accrue the salaries. And when we accrue the salaries, what are we trying to record? We're trying to recognize salaries expense. For $700. Let's make sure our accounts match, because it could be wages, huh? Salaries expense is good, but they call it wages payable. So we're going to credit wages payable. $700. Well, I said a little while back in this PowerPoint that most companies use either salaries or wages for both. They don't mix and match, but these people did. That's, so what? Good for them. So there's our adjusting entries. 1, 2, 3, 4 of them. What's the next thing we do? The next thing we do is we post those adjusting entries to the trial balance. Okay, so let's do that. Number 1, insurance expense and prepaid, $600. So we're going to have debits, and we're going to have credits. Oh, I'm going to credit prepaid insurance for $600, and that was entry 2. And I'm going to debit insurance expense. That wasn't number 2 at all. It was number 1. Remember, we always put the number of our journal entry, and insurance expense is $600. Okay. What's our second entry? Debit supplies expense, credit supplies for $1,300. So I'm going to debit supplies expense, number 2, and credit supplies. There's the second journal entry posted to the adjustments column. Number 3, depreciation expense and accumulated, $1,000. So depreciation expense is number 3, $1,000. And accumulated depreciation, number 3, $1,000. And lastly, number 4, salaries expense and wages payable. So salaries expense, number 4. How much was that again? $700. And number 4 goes to wages payable, $700. So there's my 4 adjusting entries. Well, we're going to make sure we didn't do this wrong, so I'm going to add them up. $1,600, $23,000, $3,600. Here, there, and $1,900, $29,000, $3,600 there. So everything is in balance in the adjustments column. The last thing we need is our adjusted trial balance. And we're going to get that by adding across. Add our debits. And we'll have either a debit or a credit. So the $4,000, there's nothing to add there. Debit of 16 and a credit of 6 gives me a debit of 1,000. Debit of 2,100 and a credit of 1,300 gives me a debit of 800. 20,000, no adjustments. Credit of 2,000, credit of 1,000 gives me credit of 3,000. Nothing, and credit of 700. Credit of 19,000 and no adjustments. Debit of 2,000 and no adjustments. Credit of 33,000 and no adjustments. Now, no entry and $1,000 adjustment. Same thing here, $600 debit. Debit of 18,300 and a debit of 7 gives me a debit of 19,000. Nothing and a debit of 1,300. Debit of 6,000 and no adjustments. Add them up. Here I get 55,700. Here I get 55,700. I'm in balance. everything is probably good to go. So there's an example of starting with our trial balance, making our adjusting entries, putting them in the adjustment column, and then adding across for the adjusted trial balance. It's only a handful of accounts, but if you can do 10 accounts, you can do 1,000 accounts.